Hey friends, good evening. It's Simon with Trade and Perform Coaching, doing a trade review for ES for the 13th of June. It is 8 o'clock in the evening and a little tired. It was a great day today, trading-wise. The read came in really beautifully. Bears had a really difficult time today. That's all I can say, and you can kind of see it coming. In ES and in NQ, people getting mega bearish on StockTwits and Twitter and other social media outlets with the fast correction. And the fact is, when the market goes straight up like NQ does, or when, I guess the ultimate, hey, it's a bubble stock would be, all the cryptocurrencies right now. But the fact of the matter is, when they do correct, right? And the question you have to ask is if it's a fundamental change and there's been some news event driving the change. And I can give you a very specific example of that. When we jump back into, let's say, the peak of the market in January of 2000, I remember very clearly, Lucent Technologies missed earnings. I remember it so well because it's trading about $103 a share. They missed earnings. It gapped down about 10 or 15 points. And that was the beginning of the end. It wasn't quite over completely, but I remember very clearly that was the first big tech company to miss earnings, and it just tumbled from there. By the middle of the year, it was just a slaughterhouse. But let's jump into today. Before we get started, so the idea is that these reviews are like homework, right? A little bit of journaling concept, a little bit of psychological concept, a little bit of technical analysis concept, brought all together, and then a clear understanding of what I wanted to accomplish today. I posted both on the YouTube channel and on StockTwits and Twitter the market preview. Then I want to follow that through with what was the decision process through the day, what did I do poorly, what could have I done better, and what did I do well. And the objective is to move myself from do less of what I did poorly, do more of what I did well, right, and improve daily as a trader and someone who's staying in flow, right? With the markets. So before we do that, I got to read the quick disclaimer. Let's get that in, get done with. We all know what it says at this point for my regulars and for members in the room. It's an important disclaimer. That's what it says, important disclaimer. Reminder for all traders and investors, the webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential risks, but also large potential rewards, right? So bottom line, if you don't know what you're doing, you're trading without a plan, you're trading without risk management, you can lose your butt trading futures. If you're not prepared to take risk, you're not prepared to lose the money that you're trading, don't trade. That's my, take the time to learn what you're doing and understand once you understand the risks associated with it, like the fact that a market can fall 2 or 3% in a day, and that's not for you, don't trade, right? Absolutely do not trade with money you can't afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on the channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, we got done with that. What that says is know what you're doing, understand the risks, right, and have a plan, right? Understand that you actually have an edge when you're coming to work in the morning, when you're coming to trade. Respect your opponents, right? Your opponents there's no beginner league in trading. There's Paul Tudor Jones, there's BlackRock, there's Fidelity Funds, there's Stevie Cohen, there's George Soros, and every trade you take, particularly if you trade the indexes, but every trade you take, you are trading against a pro, right? If they're selling to you, they're selling to you for a reason. If they're buying from you, they're buying from you for a reason. Your job is to have a process, identify where the suckers are, take what they're offering, and then when it's time to give back, get out of your position, make sure you're handing it back to the suckers. The suckers are the weak hands in the markets, right? And you want to be the strong hands in the market. And the objective is to move, right? Everyone figures out, almost every trader that I coach one-on-one, they've all figured out how to make money. What most of them haven't figured out is how do you hold on to it? How do you avoid the boom-bust cycle? So that's what we're going to go into, but we're just going to go into it as it's reflected in the daily trade plan. So I came in, and this morning, actually what we're looking at is tomorrow's zones. So let me minimize that. See if we can bring that in a little bit. There we go. There's today's. And so I'm going to first start off with where the white zone was placed. So it was a little bit tricky, and the white zone was a little bit bigger. So the white zone is my determination of where I think is a critical support resistance area. So the white zone today was mainly around the idea that the 62 retrace was located at about 2432-ish, right? We had the Globex high from Sunday night in that location. There's just a lot of confluence in that area, and I thought it would hold the market, right? So basically the idea of the white zone is if we opened up above the white zone, a push down into it would have served as support, and if we pushed if we opened below it, it would serve as resistance. As it was, we opened in the top third of the zone, and when I look back at it now, I pushed it all the way back to 34, but I didn't have much of a choice, right? Really, so sometimes when I look at how I lay out these zones, I come back, how would have I wanted to place the zone? Well, I would have wanted to put it at 31, 33 if I could do it again, but that would have been ignoring the Globex high on Sunday night. So sometimes it's not always easy to get it right. But then the major question is, well, how did we trade it? What was the plan? And you can go, as I said, it's already posted, right? And what I tell my daughter is she asked me how I get these zones and if it's frustrating when I don't get them right. And I said, well, usually I do get them right, and I'm very accurate with them. But when I get them wrong, there's something to learn from that. And then I can make an adjustment. So we actually had a bunch of stuff going on. We had a micro composite point of control here at 2430, right? We had the first hour low here at 2431.73. All of this took place in the white zone, and this just turned into a giant mosh pit in the first hour. And the other tricky thing was, if you look at the ranges from the other morning, so that on the checklist in the AM, we go through, and one of the things that we compare is, well, what is the range both in the first 15 minutes and then in the first hour, right? And if you look at the past couple of days, look at the range. Here, even the prior day, the range was pretty decent, right? Range first hour, pretty good range first hour, almost 10 points every day. And all of a sudden, we get collapsed upon. We end up with a 4-point range. So what that told me right away was, number one, even though we were gapping up, normally I would look to grab a gap up for potential open drive higher, except, right, what's going on here? We are not gapping out of range, right? You can see we have all this overhead resistance over here to the left, right? And we ran into that overhead resistance, right? Number two, we're not gapping down, right? Look at all the support that we have in the top of this area over here to the left, and we get a compressed range. What did I end up doing off the open? Absolutely nothing. The idea was if you were extremely aggressive, you could short the open drive against resistance up in this area. But if you look, this was tricky and it was not easy. A couple people did take this trade to the short side. However, if you go back to the chart, so the first thing was, so to reset before I jump too far forward, we were gapping up. We were not gapping out of range. Additionally, if you look at the tick here, NYSE tick was weak, right? Wasn't opening at plus 800, which is pretty typical for an open drive higher. That's the second time, by the way, if you go back to Friday where we had a gap up and the tick did not exceed positive 600 off the open. It's one of the hallmarks of a strong open drive higher. The tick will open up plus 700, 800, 900, 1,000. So the broader market already wasn't participating out of the gate, and it was another weird day for the tick because the market was really disconnected. And what I mean by that is when we were driving down, right, there was absolutely no participation from the broader market, right? And then the weird thing is when we started moving up, we actually got some broader market selling as the S&P 500 was being bought up. Again, it's a bit of strange days with the NYSE tick. This is not normal behavior, but it really cleared up in the afternoon yet again, just like it did yesterday, and started behaving properly. And you can see it was swinging really nicely at the end of the day, and the swings were going in accordance with where the PA was going in the S&P 500, And while I'm not a strong correlation trader, meaning between different markets, correlations between different markets, I do expect the broader market of the New York Stock Exchange and the S&P 500 to trade in a loose correlation and generally go the same way. So it's strange when we get this going on. It required a little bit of patience. So this was the read. This morning I thought this area was chop, right? I thought once we traded back underneath 24.34 that you could, if you were an aggressive trader, you could short the backside push back into 24.34. And if you push that out, what you'll see, right, so if we look at the process, we opened up. I just want to retrace the footsteps so you can see what we were thinking, right? We opened up. We could not get above Sunday night's open. We got short squeezed and pushed. A lot of this had to do with the short squeeze going on over an NQ. Too many shorts, way too late in the game on that downside move, right? We came up to the first hour high. We rolled down from 36 to about 32. Again, only a 4-point rotation. But once we were back underneath that 34, you can see how multiple times, if you look, we backside tested this. This is what tells me I had the zone in somewhat of the right location. Because we resistance, breakout, trap back in below 34, attempt to backside test, fail, backside test, fail, attempt to close above, fail again. That kind of told us that that was going to roll over. A few of the members in the room took a short to the downside. Again, my focus today was primarily to the long side. And so the idea was, when this is rolling over, so two things. Notice, first of all, the broader market, when we pushed down, the strongest downtick was actually accomplished right here prior to 9 a.m. And the tick was actually improving as the S&P 500 was rolling down. And what that means is that there was buying in the broader market, even though the S&P was getting sold. Additionally, the rotation down was from 35 to 30, 29 at the worst, right? And this is a micro composite volume point of control, which just means that we had the highest amount of volume concentrated. I believe it was over an 8-day microcomposite volume point of control, but if you look at the 6th, 7th, and 8th, you'll see it right there. Those were all high volume nodes on a volume profile. And so this made up the microcomposite point of control, and we pushed right into it, right, to find responsive buyers. Now, I want to mark this off because I want to show you all something. This low is hit at 10:05. Look at the same time frame on NQ, and you can see that we had that pennant break to the upside late in the day. But look at that same time frame, 10:05. There's 10:05 on NQ, right? NQ is really pushing. Oh, another thing to look at, which made it difficult to get bearish, right? We're an hour into the day, right? This is 9:30. This is the hour into the day. We haven't had gap fill. We haven't had half gap. NQ was holding to that point, right? And you're in the decision-making process, we were balancing one of two things. So we don't have an open drive higher. We actually on NQ have failed open drive higher or failed range extension, right? But we don't have half gap and we don't have gap fill. Contradicting terms, and it kind of put me on hold. I was looking for a clue. And where that clue came in is when we filled the gap, you can see we got responsive buyers in NQ. But when NQ hit the low and it hit that gap fill, look at where ES is. We're still, right, I'm going to open this up for you so you can see it. And I'm going to shrink the tick. Okay. We're still just now, this is the mid from Globex low to US session high. This is the 50-60 retrace. It's essentially the half gap from yesterday's close to today's high, just to the 62 retrace. You can see that right there. And so when NQ was filling the gap, ES was just getting the half gap, right? And we were demonstrating balance. And so we're pitting, see how we're pitting little pieces together? Balance is usually indicative of when we break balance, you find responsive buyers, and it pushes back into the mid, right? So the first place we looked to go long today was this 24.31 to 24.30 location. Very little heat. It turned out to be the low of the day, though we didn't know it at the time. And what was the goal? The objective was to push it back in. And what we're trying to push it back into? Right back to the mid of the day. And that's exactly what happened. Now, this is very, very important. Remember, if you look at the performance on NQ versus ES, NQ melted over 3% to the downside. ES didn't make it past its last swing low. If you look on a bigger time frame here, and I'm going to pull this up, and so you can see it really quickly. We're going to go to just a 15-minute, actually let's just go to a 60-minute chart. Then we're going to insert NQ. Okay, and so this chart is relatively well split. So I want to show you something. This is ES here, right? This is NQ. Okay, so if you look at NQ on the degree of the roll down, right? ES does not make it. So this is the last point of a break to the upside. You can see that gap on NQ at 58 and a quarter, right? 58.25 and 3/4 specifically, right? This is the last point of a break in ES, right? And you can see we came right down to it and found responsive buyers and have traded all the way back to the top. This is dramatically different. And usually NQ and ES trade in lockstep. So what does that tell you, right? If you have a market that's sinking and you have a bunch of stocks that are going down, the stocks that don't go down while the market's getting pounded will be the ones that respond up strongest when it's done being pounded. Well, ES never broke, guys. It never got below its last point of resistance, held it. This is going to result in a sharp move back up. Where's the logical place to come back up for NQ, right? Everyone's like, oh, no. You know, NQ's a short, it's a bearish weekly candle, so on and so forth. That's true. But even in a bear market, and I've been pounding the table on this ever since Sunday night, don't get caught short in the hole, right? B, there was no fundamental news that came out on any NQ stock. Not one stock in the index has missed earnings, right, badly. Not one stock has got cut in half. This is simply everyone got crowded into the, no one's at the exit for a long time. Everyone got crowded in. If you look the last time we experienced this was a one-day wonder. This turned out to be a two-day wonder, and we were shortly at new highs. I would not be surprised to see us get back above 58.25 and 3/4, or at least retest it, right? But either way, I'm sure as hell I'm not going to be short in the hole down here. Just ridiculous. The number of people I saw pounding the bearish table, and the number of people I saw wanting to find every opportunity to short NQ, the entire opportunity after the first day down. The biggest money opportunity in NQ has been to the long side. The biggest money opportunity in ES has been to the long side. And in ES, that's particularly true on almost any day of the week and almost any time during the year. Down days last very, very short periods of time, and most of the time we spend either U-turning and moving back up or grinding to the upside, right? Focus on the long side. So going back to today, we knew ES was not in trouble, and we were above on ES. We were above the, I'm going to move this here, on the 24-hour, and I used both volume profile and TPO. We were above value area high from the TPO. We were above the double distribution, and this was our only resistance here. And once we made it past this resistance, so what told us to get long in here, right? So if you look, ultimately what happened was we pushed into resistance a little bit past it, right? Rolled back down into value and found responsive buyers, or towards value and found responsive buyers. So if you look at this chart, we'll pull this down, right? So you see NQ tanking, right? But even in that tanking, it couldn't get below yesterday's high, right? Filled the gap. When NQ filled the gap, we're still holding half gap. Tick is not deteriorating at all as we're pushing towards a low, and we were at the micro composite point of control. This told me if you could get along here and you could get trapped back in above first hour low. So this was our long. The target was the mid or higher. If you could get it, really hard to be patient through a grind like this for most day traders, right? But then the next call was this, right? If you've been trading at all and you're familiar with stats, what this was a impulse move of a break of IB low or the first hour low, and normally in a balanced market or a two-way market, the retrace back to the 50 retrace is a high odds short. And if you'll look here, this first move into the 50 retrace, you can see it printed back down towards 21.31, but really that was a 21.3250 short if you were perfect, and the best rotation you could squeeze off of that was about 3 ticks. right? And it took, if you look from the time it hit, 5, 10, 15, 20, 25 minutes. And so the call there was I wouldn't short the push back in. And where that goes back to is, in my journal is, I only want to take the highest odds trades, but I understand that buyers are in control in ES, right? Even with the push back down, and that what I wanted, I would have been fine if we would have rolled over, but the goal would have been, the major goal was to get it to push into this Monday's volume point of control and back into Globex low for a long. So sometimes you make decisions that the trades you don't take pay you well, right? So you got the long out of here, you don't take the short. We definitely passed on this location. And then at the end of the day, so tick started behaving properly, and right in here, we finally broke and we consolidated above first hour high. That's bullish. And then we pushed back in over just after New York lunch. And what we were hoping for, now it's just the opposite, right? Buyers are in control. So we break IB high or first hour high. And now what I'm looking for is a break back in. And now this time I do want the 50-60 retrace. And I want that retrace from here, below the day, 29, back here. And we just can't get it. So the plan was to reload the long into the 33.50 down to 32 area for a push back to the high of the day. Now, when you don't get what you expect, which would be a retrace back to the 50 retrace, and you see a consolidation, right? So I usually do not trade the news, but this was my thinking. This is when the U.S. Attorney General was giving his testimony. He had already said that he was going to contradict FBI, the testimony that the FBI director gave to Congress. And so, look, in my reasoning, the market was simply on hold, waiting for him here, and I actually got pretty lucky. So the first time was an attempted long at 36.25. When I talked about the long in the room, I spent too long talking about it, and I didn't get my order in time, and I did not get filled on the backside right here at 36.25, and it rotated up to 37.25. No big deal. Comey starts Sessions starts testifying right here. We get an initial push down to 35.50. I took 35.75 long, and then I just parted it out. The only mistake I made here, if there was a mistake, first of all, I was using a 2-point stop for my trade. So entry 35.25, exit 35.75, exit 33.75. And I figured the risk was that somehow Sessions would say something that would be demeaning to President Trump. I just didn't think that was going to happen. And I felt that the risk, 2-point risk, in addition, if you look at the tick down here, let me try and bring that up, right? If you look at the push on tick, we got the heaviest push on tick for the afternoon to negative 500 roughly, and we couldn't break the last swing low. That told me that sellers were unable to push back below the first hour low. Luckily, we had a second opportunity right at the top of the hour. I took 35.75, and then I scaled all the way up. I got stopped on my last little bit right here on this punch down on my last little. I just had a little tiny bit left, and I got stopped out. But all the way up through here, we got pushed. And part of what was driving that, or knowing that we were going to push, is two things, right? And I said it from the beginning, about mid-morning. I said normally what happens, the pattern is pre-Fed. We go into a squaring. We go into a market squaring, meaning large funds start squaring their positions and just try to get their portfolios balanced. That's what all of this is. Then they make a move lower, right? Usually that move lower is more substantial, but then at the afternoon, we come back in and we push back to the upside. And this was there was no zone here where the first hour high was. This was the upside target all day. It's still resistance. This is the scene of the crime from the breakdown from Friday, and it's due to be revisited. I still think it's resistance overnight. But again, you also have the all-time high sitting right above. So if it punches through and holds above, again with Fed Day, that's a wild card. So no idea what it's going to do. I can tell you this: for me, the critical area now. There's two critical areas. Shorter term, the critical area is sitting at, let me look here, 29.75 to 33 approximately. And then below that, As long as we hold 21, so another about 9 points down. Bigger picture, as long as we hold above 21, right, we will still be in balance. Buyers will be in overall control. Sellers need to get below 21 to come back and test that 10 to 13 location. And again, I'd look to be a responsive buy. I'd look for responsive buyers in that 12 to 13 location, 10 to 13, 24.10 to 24.13, and then below that is 24.03 to 24.05. All of those, again, I'm looking to get long for pushes back up. I'm not overly concerned about the short because we're still in a bull market and there's been no damage to the market overall. And then if you can also see late in the afternoon, see this pennant that was forming, it was just getting tighter and tighter, and you can just see this NQ break about to come. Again, this is all a result of people insisting that if you look at the day, everywhere through here, after they finally got the initial push down, once you could not get below yesterday's close, these shorts were just totally screwed, guys. I mean, there's just no way to survive this. Higher highs, higher lows on the 5 minutes. You can just imagine people building their shorts in here, and this is the blow off where they finally said, we give. You get above here, there's still room. This is the 50 retrace from the breakdown and from the swing high. And I still think this is probably potential for the Fed, and then we'll see where the market goes from there. I don't trade the Fed numbers. I don't need the volatility from the Fed. It's a red flag condition for me. I don't like to trade in markets where fundamental news might affect the pricing as opposed to just technical levels, which we have most days. So I steer clear. So I'll be trading in the morning. I'm a passenger in the afternoon. At any rate, a little bit longer than I normally go, guys. Again, what I want to do more of, right, is I would have liked, looking back, I would have liked to have been more aggressive on the push down here into the multi-day volume point of control, and I wasn't. I did not hold this trade long enough. It never came back against me, never even made a 50 retrace. I really had it in the sweet spot, so I'd like to do more of that. I did really well through here. We recognized it as chop. We didn't overtrade it. A few people had shorts out in the room, which I'm happy for them. That's great. And then I thought I had a fantastic trade here. I thought I had a nice tight stop with a 2-point stop. A great read with regard to the tick. So at any rate, if you'd like to learn how to be a better trader, to break that boom-bust cycle, to get consistency, well, you're welcome to come visit us in the room. I do coach one-on-one, but I'm pretty much full booked up right now. But you're welcome to visit us in the room. If you'll email me at tradeandperform@gmail.com, I'll be more than happy to extend an invite to you. Anyways, I hope everyone has a wonderful, wonderful day. And guys, let's kill it in the morning and enjoy the afternoon off and let someone else deal with the volatility from the Fed, assuming there is some. It's an interest rate decision, so I imagine it should be a little more volatile than normal. Everyone have a good night, and don't forget, meditate. Keep a calm mind. Calm mind lets you stay in flow. Talk to you later, guys.